Capital One just got caught allegedly stealing money. Now they try to play crazy. Listen to this.
Now, the new federal lawsuit that accuses Capital One of deliberately underpaying interest to millions of customers. Our chief business correspondent, Rebecca Jarvis, is here. Got those details? Good morning.
Absolutely. Good morning, Robin. Guys, nice to see you. And you probably know their ad campaign that ends with the question, what's in your wallet? Well, the government says millions of Capital One customers should have a lot more in their wallets. The Consumer Federal Protection Bureau alleges Capital One cheated its customers out of more than $2 billion in interest by creating two nearly identically named savings accounts, 360 Savings and 360 Performance Savings. The difference, that Performance Savings account offered interest rates 14 times higher than the other one. The government accuses Capital One of misleading customers about the higher interest performance account and even banning employees from telling existing customers about it. So they could have switched and made more interest. They didn't tell them, according to the government.
And according to the government, they also, Capital One, misled customers about having one of the highest interest rates.
Yes, the advertising is what the government is focusing on here. And the government, Robin, alleges that Capital One advertised that 360 savings account as having one of the nation's best and highest interest rates. Meantime, the bank actually froze the rate on those accounts. Capital One is vigorously denying the allegations. They say the government is following a recent pattern of filing 11th hour lawsuits ahead of a change in administration. The bank also says it marketed the 360 performance savings product widely, including on national television. The feds are requesting a jury trial here, and Capital One says it will vigorously defend itself in court.
A lot of people are going to be looking at their account very closely.
Absolutely, yes.
All right.
Hit the like button if you're upset, because if you're upset with Capital One, you're about to be upset with Chase, Wells Fargo, and Bank of America. Listen to this.
Consumer Finance Protection Bureau is suing the operator of Zelle, plus JP Chase, Bank of America, and Wells Fargo, claiming the big banks failed to protect consumers from hundreds of millions in fraud. Yahoo Finance's own Jordan Weissman has the latest. So, Jordan, how should we be reading this lawsuit, and what does that mean for everyday consumers?
Well, to start, this is a big lawsuit from the CFPB. It's a major action. They're going after three of America's biggest banks for essentially, the argument they're making in the complaint is that these institutions rushed Zelle to market because they were so terrified of competitors like Venmo that they put out a product that just did not have nearly enough fraud prevention and security features that, in fact, just made it extremely easy for fraudsters to get their customers' money. And then to make matters worse, according to the agency, JP Morgan, Wells Fargo, Bank of America did not do nearly enough to make sure people could get their money back. In the lawsuit, they talk about how these banks at times essentially told customers that they should try and go work it out with the fraudster. And if that didn't work, then they should contact law enforcement. So it's a pretty, it reads pretty damning in a lot of ways. And in a way, it's also, I guess you could say it's a warning to customers for some of the types of scams that they might need to watch out for.
Interesting lawsuit to continue to monitor. And Jordan, you also got the chance to speak with Rohit Chopra. He's the director of the Consumer Financial Protection Bureau about some of the agency's recent actions aimed at the credit card industry. What did he tell you during that conversation?
So the CFPB has been doing something pretty fascinating in these last several weeks, which is they're just, they're not really taking their foot off the accelerator when it comes to enforcement actions like their lawsuit against Zelle, and also just, their general, kind of activity around industries like credit cards. This week alone, they put out a report essentially criticizing the retail credit card industry for charging extremely high APRs. They put out what amounted to a warning to industry, telling credit card companies not to devalue points and that it was illegal and could attract a lawsuit. And then they also put out this new credit card comparison tool. The idea behind that was that they claim that a lot of the popular sites that consumers currently use are essentially kind of rigged with kickback schemes. So they wanted to do their own version of it. What Chopra told me is that he thinks there's sort of a broad problem right now with price gouging in the credit card industry. His argument is that you've just seen credit card companies' margins and profit margins expand much more than you'd expect based on where interest rates have risen. And a lot of that has to do with the ways they are getting consumers to sort of ignore the interest rates that they're being charged on cards when they're shopping for them, and instead focus more on things like points, which might actually not be that valuable for people who are allowing their balance to, revolve month to month. It was an interesting conversation, and this sort of seems to be the message coming from CFPB right now, is that shoppers need to pay close attention to the APRs, to the interest rates they're paying, which seems to be going further into kind of the back of their minds when they're shopping for credit.
See, I already know you're upset, but this right here is gonna make you hot. Check this out to see how the bank's been playing us.
Federal rule plans to cap bank overdraft fees at $5 for many customers.
And that could add up to a $5 billion savings per year on those banking fees, according to the Consumer Financial Protection Bureau. ABC's Melissa Adon explains.
Bank overdraft fees kick in when you try to withdraw more money from your checking account than you actually have available. Those fees are usually $35 per transaction. But that may soon change to a cap of $5 for many customers.
Big banks love overdraft. It is easy profit for them, but it is punishing for so many Americans, especially those who live paycheck to paycheck.
Rohit Chopra, the director of the Consumer Financial Protection Bureau, a government watchdog in charge of protecting the public's finances, says the average American family incurring overdraft fees will save around $225 per year or more.
We've seen how banks can reorder your payments, or where a debit card purchase for something small like a coffee can end up with a big fee.
The cap was first proposed last January as part of the Biden administration's crackdown on so-called junk fees, the banking industry accusing the CFPB of blatant overreach. The Consumer Banking Association in a statement saying the proposed rule would reduce consumer choice and ignore the substantial progress America's leading banks have made in saving money for consumers. Some major banks have already acted on this, such as Ally, Citi, Bank of America, and Capital One, voluntarily eliminating or reducing overdraft fees.
Now, banks could end up charging more than $5 to cover their costs associated with overdrafts, or if they choose to make money from the fees, they would have to disclose the terms of the loan up front. Now, the change officially takes effect next October, but it could face legal challenges. Melissa Adon, ABC News, Los Angeles.
It's crazy out here, and what's even more crazier is that the credit bureaus don't even investigate your accounts when you send your letters in. Hey, go watch this video right here to see what I'm talking about.